Hello, this is Melissa, your insurance exam queen, and we are doing a video on the difference between term insurance versus whole life insurance. So this will be kind of like a quick bullet point of differences between the two and some of the testable points that they like to ask about. But then we will have separate lessons on term, going deeper into term, and then a lesson going deeper into whole life policies. So the biggest things between these two is that term is known as temporary. Temporary. It is only good for a certain period of time. Term. Term means time. Like a president has a 4-year term. He's only allowed to be president for 4 years unless he gets elected again, but then he'll get another 4-year term. A term is a time period. So term insurance is temporary. It's not forever. On the flip side of that, whole life is known as permanent. It is forever. It is, in fact, for your whole life until you die. Now, legally, technically speaking, that is going to be age 100. So a whole life policy, and we'll get into it, is known as permanent, but it won't go past age 100, and we'll talk more about that later. But for the purposes of understanding term versus whole, they will always refer to whole life as permanent, and they'll refer to term insurance as temporary. Now, the next thing is that term is going to be cheaper, premium for more coverage. Okay, a cheaper premium for more coverage. Whole life is going to be a bigger premium for, I don't want to say less insurance because you can get however much you want, but it's definitely going to be, we're definitely going to put bigger premium, bigger, more expensive premium. So, like, as an example of this, you might have if you were to have a $2,000 policy, so this is your death benefit, that might translate to a $20 premium. On the flip side, if you were to have a $2,000 death benefit over here, that's going to translate to a $200 premium. And we'll learn the difference. I mean, the key difference is that it's permanent, it's forever. But the biggest reason that this is happening is because whole life has something called cash value. Cash value. And we're going to go into what all that means. But basically, there is money available for the insured to take it if they need it. So think of a whole life policy as a savings account for your debt, and you can tap into that savings account if you need it. Term life has no cash value. No cash value. The only benefit you have to term is if you die, it pays out. Whole life has a benefit that you can tap into the cash value while you're alive. And that's the key difference as to why the premium can be so different between the two for the same amount of coverage. Not only because it's permanent versus temporary, but because on a whole life, you have cash value, and on a term, you do not. So anytime they talk about cash value, they're referring to a whole life or a version of whole life policy. There's a couple different types, like universal. But with term, zero cash value. So term says you get $200,000 if you die. But if you don't die, all the $20 you paid goes away. You'll never see that money again unless you have this very expensive rider that you can add called return of premium, where you can get your premium back, but you have to pay double the premium to get it. So I like to call return of premium rider very expensive free insurance, because in order to get that return of premium rider, you're paying double your premium. But it does mean that if you never use your insurance and it expires because the term is over, you will get that money back. Otherwise, with term, you'll never see that money again. That $20 is gone. And if you were to have a term policy for 10 years, let's say it's a 30-year policy, but 10 years in, you quit paying, you'll never see that $20 you paid for 10 years. On a whole life policy, if you quit paying after 10 years, you actually still have cash value that's yours and you can take that money. So that's another reason why whole life is a lot more expensive. So we're going to get into all those details. I don't want to get too far into them. This is mostly just a quick breakdown of the two. And these are some of the more tested points. You want to make sure term, temporary, no cash value, biggest bang for your buck. So when I say cheaper premium for more coverage, biggest bang for your buck, you're getting $200,000 for only 20 bucks. Permanent or whole life is known as permanent, technically till age 100. It's going to be a bigger, more expensive premium because it has something called cash value, and we will explain what that means. All right, this is Melissa, your insurance exam queen, sending you all the loves and all the vibes to pass your exam.